This is a major moment for the stock market right now. There are some very big things happening on the charts right now, so listen carefully. This is a major turning point. This video is extremely important. We're going to divide this video into 4 parts. We're going to start off talking about the major trend. Is it time to go long? Is it time to go short? What's the trend? That's very important. We're then going to talk about the turning point. This is a major turning point right here. This is the 100-day moving average. The next week of trading determines the next 6 months of losses or gains in the stock market. We're then going to talk about the short-term sentiment. How scared are investors of this correction? We're going to see if investors are still complacent and still pouring into longs right here. That would be a very bad sign. That would be a sign that this is actually not the bottom of this correction. And we're finally going to talk about whether this is the beginning of the big deflation that we've been talking about for weeks, for months now. We're starting to see some shifts in different charts right now. Is that a warning sign, an early warning sign of a deflation? So let's start off with point number 1. For weeks throughout this uptrend, we were looking at a specific trend line. This was the trend line we were looking at. Many reactions along the way, and it actually formed a wedge pattern right here with these 2 tops and divergence on the MACD, okay? That's telling you a reversal is likely coming. The last time we had daily divergence like this was right here, right at the top of the January rally, right here. Higher high and lower high on the MACD. So that setup gave us an early warning sign to get out of our longs to protect our gains along the way. We had 3 targets, and the final target of that correction being this one right here, the 3,211 point level. So we knew that this correction could get all the way down here. This was something that we expected. We're not surprised by this. It's an important level. We're back at the 100-day moving average. It is normal for the stock market to retrace back to this level during an uptrend. I'm seeing a lot of people on YouTube, even on Twitter, talking about the fact that this is too big of a move to be just a correction. That's just not the case, okay? We still need more work to the downside. We need to break this level right here, make a strong break, a retest and reverse, and that will be the moment to start getting bearish, start being short on the market. Right now, we're not bearish. We're looking for long positions, and we're going to talk about that throughout the video. And by the way, if you want to follow us on Twitter, we do have a Twitter account. We're going to link it in the description below. So does the fact that we are at support mean that we need to get into a long position and that the markets are going to bounce straight away? Well, they could, but that doesn't mean we need to get into a trade straight away. There's no rush. We're going to get opportunities if the markets are going to reverse. But you should absolutely be in a rush to hit the like button on this video. There's a lot of research and time that's being put into making these videos. So if you're enjoying the content that we put out, make sure to let us know by liking this video. Thank you very much. And that brings me on to actually talking about the trend. This was the trend. This was the trend that we were looking at. Many reactions along the way. We had a channel right here grabbing these 2 tops. We even looked for long positions back here before the trend actually broke. So we're no longer in an uptrend, so there's no reason to start buying into the market just yet. We're gonna get opportunities. Now let me show you something else very interesting. This was a chart that we posted as a community post yesterday. We highlighted this downtrend line with a reaction that was forming. A third reaction forms a downtrend line. We are officially in a downtrend. That's not the time to be bullish. It's even the time to start considering shorting opportunities if we continue breaking down important levels. And we're going to talk about what we said here in just a couple seconds. So we have a downtrend line. We even have sort of a wedge pattern. Right here, we have divergence on the hourly. We can zoom in a little bit, go into a 2-hour chart, and you'll see this is a pretty clean wedge pattern. We have price going down, MACD starting to wane up, So if we get a break of this downtrend line, that's a pretty good sign. Does that mean we should go long on the breakout? You can, but the ideal scenario is to wait for a quick retest, see it act as support, and that's when you go long. There's also a very important level to watch. The 3,350 level right here acted as support all the way through right here, bounced right here. So if the price regains this level and acts as support, that's another huge buying opportunity right here. Now let's move on. We still have a lot to cover. We're going to move on to point number 2, and that is the stock market turning point. This orange line right here, that's the 100-day moving average. We're currently sitting right on top of it, right on it. We just hit it. So why is that interesting? Well, let's zoom out a little bit. This is the crash of 2018, V-shaped recovery in 2019 right here. And you can see throughout this entire rally here, for a full year, we had big moves to the upside and then retests of the 100-day moving average. Then another big move, then another retest, move up, retest, move up. This is home base for a rally. This is home base for a bull market. During a crash, you're going to see the price pop below, retest that level, and that's your opportunity to go short right here. And I'm sure you've noticed that right here on these corrections, we actually popped just below the 100-day moving average. Okay, this is how they trick investors to get bearish as the price dips below it. People have been buying the dip all the way through this correction right here. If we break this moving average, there's going to be a lot of panic. We're going to see a lot of stop losses get hit, and that's when they're going to be able to pop it back up, and that's when you're going to get a short squeeze. We're not saying this is going to play out, but this is something to watch out for. If this happens, that's a major bullish sign. You need to be thinking about the investor psychology in your trading. And that brings us to the third point of this video, which is the short-term sentiment. Are investors scared of this correction? And that's very important to know. So we're going to take a look at the put-call ratio. This is something we look at a lot on this channel. It is so useful in trading. We get this data at Sentiment Trader. You can access their website through the link in the description below. And so you can see this is the stock market above, and this is the put-call ratio below. When it's close to the green line, that means people are getting very scared. When it's close to the red line, that means people are getting very complacent. You can see at the very bottom of the March crash, that was an extreme reading on the put-call ratio. Same thing here during the 2018 crash, extreme reading on the put-call ratio. Right now, the put-call ratio as it is, right after this small correction, it's currently sitting in the mid ranges. It's not green, it's not red. Investors are not scared yet. So we're not at an extreme put-call ratio level. Does that mean that stocks can't go up right now? No, absolutely not. This is about probability. Our confidence in a long-lasting rally right now would be much higher if the put-call ratio was higher up. Look at the corrections throughout this rally right here. This, again, same thing. We have the 2018 crash right here and the rally that follows it. You can see for every correction right here, we have the put-call ratio spiking. Investors were getting scared. Again, same thing right here. Correction, put-call ratio spikes. Same thing again, right here, put-call ratio spikes. If the market makes one more leg down, let's go back to the chart, takes out the 100-day moving average right here, just like we talked about, and then reverses, would that make the put-call ratio spike? I think definitely. So that's absolutely something to watch and a scenario to consider. This is a very tough market to trade, okay? This is really not easy. It was easy back here. We were in an uptrend. We had a beautiful trend line. That was an easy market to trade. This is not easy right here. You need to be very quick and you need to manage your risk. You need to be prepared to be wrong. Now let's move on to the final point of this video. Is this the beginning of the big deflation? And we're watching another very interesting chart right now, and that is the dollar. Now, before you start commenting that you don't care about the dollar, this has been one of the most important charts in the past few weeks for any investor. The downtrend in the dollar has been a major push for all asset classes, stocks, gold, crypto. So this breakout right here, it's currently breaking out. This is a big deal. It means people are starting to panic and people are flocking to the dollar, which is still the reserve currency. Look at what happened during the health crisis right here. Stocks were crashing, gold was crashing, and the dollar went up. Right now, what's happening? Stocks are crashing, gold is going down, and the dollar is going up. Now, we can't ignore this. We have to watch this closely. But the way we see it right now, this is a counter trend move. We talked about this downtrend line on the last gold video that we made. And we said that if we break out here, okay, that's bad news for gold, bad news for stocks, and we're likely going to rally all the way to this resistance level right here. But the point that we wanted to make with this is that this is still a warning sign. So again, there's no rush to get into a trade. You don't go long on the stock market when you see stocks going down and the dollar going up. That's not the moment that you go long on stocks. So either you wait for the stocks to start going up, start breaking out of major levels, major downtrend lines, or you wait for the dollar to start reversing off resistance and start to continue its downtrend. This is the scenario that you want to be in if you're long on asset classes, whether that's stocks, gold, or crypto. So that's about all we wanted to cover in this video. If you enjoyed, make sure to drop a like and subscribe to the channel if you haven't already. In the meantime, good luck on your trading and see you next time.